Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark on the violent market reaction to the UK referendum. Trends Journal publisher Gerald Celente says Brexit could turn 2016 into the year of panic. Former Brit corporate advisor Martyn on what some UK billionaires are saying. We'll talk to Ross Clark right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of 65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Nice to be with you, Jim.
After the Brexit vote, a violent reaction on the markets. Give us a little rundown.
Well, we knew it was going to be a binary reaction as far as the markets were concerned, either up or down with nothing in between. And we managed to get that in spades as far as the markets were concerned on Friday. The bulk and the greatest part of the action occurred before North America opened. We ended up with a real flight to safety, move into the U.S. dollar, out of the pound. Pound was down over 10 cents at one point near the close. The Canadian dollar under pressure as well, one of its worst days in years. Crude oil market down as well. It was one of those days where they say flight to safety. We saw it with gold. We saw it into the U.S. long bond market, and actually saw a number of the good, solid dividend payers here in Canada managed to hold reasonably well during the day.
Why would there be such a plunge in the price of oil, considering nobody's going to stop driving because of the vote in the UK? Well,
it's that whole question of the destabilization of the markets in Europe, and is the economy going to be softer, and therefore, demand drops off. Overall, the oil market was, I think, and we've talked about this, for me, it was looking pretty tired when we were up at the $50 range. We had a first decent sell-off to about a $5 sell-off, 10%, a week or so ago. Got a decent bounce. I think the markets, in the oil market, it was ready for a consolidation, and this is just another one of those pieces of news along the way. And From our perspective, we're looking for another small leg to the downside, probably into the $43 range. I've actually had to raise the target level a little bit because it's taking a fairly decent period of time to have this sell-off. So 43 and a half looks reasonable. That's maybe $4 from where we closed here on Friday. And part and parcel with that is the move in the Canadian dollar, which once again, during the rally we just had in oil, to go back and test the $50 level, Canadian dollar underperformed again. So therefore, it's not unusual to see the extent of the break we had here today.
One of the reporters at the Financial Journal in England said, "What a strange day we've had, where the resignation of the British Prime Minister is only our third top story."
Yes, I mean, clearly this is a day for the record books. June 23rd will go down as one that I'll remember, just like August the 24th was last summer. The action, you generally expect an item like this that is so much in everyone's mind ahead of time, like a Y2K, all of that anxiety going into it, that if it becomes a non-event, then the markets are pretty flat. But in this case, where you go directly against the polling that was going on, and the bookies leading in the week leading up to this clearly ended up getting it wrong. So, and a lot of people have been looking at that. So the reversal that we had from a very, very strong pound early in the week to, the decimation on Friday, it's just an increase in volatility related to the news, and it's going to take us a little while for this to calm down. I wouldn't be at all surprised that, it continues in through next week, but we'll see where the stability starts to kick in.
Ross, have yourself a great weekend.
Thank you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. You can email Ross with any questions you might have at ross.clark@cibc.ca. Coming up, Trends Journal publisher Gerald Celente on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
We're chatting with Gerald Celente. He's the publisher of the Trends Journal. You can find it online at trendsjournal.com. Their slogan, History Before It Happens. He's speaking to us from historic Kingston, New York. Welcome back to This Week in Money, Gerald.
Hey, thanks for having me, Jim.
What a shocker around the world. Brexit vote, 52% in favor of leaving the EU in Britain, 48% in favor. The Prime Minister of England says he will resign within 3 months. And that's only the third top story in the Financial Times. They say what strange times we live in. What is the meaning of this?
It's bigger than Brexit. And what Brexit is we're looking at it, it's the beginning of the end of the European Union. And what they did by voting to leave, and it's very important to put it into context. You mentioned 52 to 48. 52 wanting to leave, 48 not wanting to go. Go back a little over a week ago, just a week ago, and there was that murder of the British MP who was very much in favor of remaining and a loud spokesperson for it. So when that happened, the numbers really changed rapidly. They were showing a much larger group in favor of leaving, but that kind of turned the tide a bit. And it was the Labour MP Jo Cox, the woman who was killed by this madman. And then immediately after that, Prime Minister Cameron tweeted that she was a strong voice in the campaign to remain in the EU, and will be badly missed. Well, when that happened, the vote went almost equal. It changed from being 47% wanting to leave to some 40% wanting to stay, and the rest undecided. And we had written about this before that happened, so I know the number. So what we're looking at here is, again, this is much bigger than Brexit. You had a vote in Italy on Sunday, the Five Star Movement. Virginia Raggi, a member of that party, won and became the mayor of Rome. They were also victorious up in Turin. And you look around what's going on with the AfD party, Alternative for Deutschland in Germany, the Le Pen's party in France, what's going on in the Netherlands. Immediately after this vote in the UK, a lot of populist parties are now calling for referendums as well to exit. What this really means in the long term, it's going to be the end of the European Central Bank. and the ultimate death of the euro. And the trend is underway. And in the UK, they used immigration as one of the big issues. And the migration trend, of course, being poorer, lower paid workers from poorer countries in the EU that were free to travel because of the Schengen Agreement that allows them to cross borders in any European Union member country going into the UK and working for a lot less wages and taking jobs away from UK citizens. That was the primary motive, a primary issue of the exit, the leave rally cry, as long as them losing their national identity. However, underneath that is a bigger economic issue. And the economic issue is that since the Panic of '08, the conditions worldwide in developed and undeveloped nations have deteriorated rapidly, and only the 1% has gained from the monetary policies of the central banks. So this is really, the Brexit exit was really a shot across the bow of global central banks, and as we see it, the beginning of the end of the European Union and the European Central Bank.
Would you consider the Brexit vote a black swan event?
No, not in the sense that, we knew it was coming, and it was a trigger point. It's a trigger point to what we had forecast, and when you go back to our top trends of 2016 and look at the cover of our Trends Journal, the headline was The Panic of 2016. So this was merely a trigger point for that panic.
Is this the beginning of the end of globalization?
It's going to be the beginning of the war against globalization. There'll be many battles that will be won and lost. Unfortunately, when all else fails, they take you to war. I could get your mind off the Brexit in a split second if a terrorist strike, false flag or real, was launched against a major city of a major member of NATO or any major Western country. So, and you go back to 9/11, just to give you an example. People forget that the United States was in a recession, and that George Bush, just several months into his presidency, his popularity rating was going below 50%. Bingo, 9/11 happens. You forgot about the recession. What recession? And Bush's popularity rating soared. So when all else fails, they take you to war. And that's what you're looking at here. We're talking Brexit. If you were living in Yemen, you would be talking about your life as the Saudis and the coalition of the killing are slaughtering them. If you were in Syria, and among the 300,000 people that are dead, no one's hearing from you, or the 11 million that have fled the country or fled their homes. So those are the big issues that are not being reported and being pushed back into the undercurrent of news. For example, here in the States, the New York Times, that calls itself the paper of record, just ran a huge story about, what happened on Prince's airplane when he went into, fading out from overdosing on drugs. Front page above the fold. So what I'm saying is Brexit's in the news now. It'll be in the news for a little bit. And by the way, very important to note that they made the announcements from the central banks, from government entities, that the plunge protection teams and all the others would be in place to make sure that if they did exit, that there wouldn't be panic on the streets. So what we're saying is they're rigging the markets. It'd be going down a lot lower, and when you look at the graphs, for example, take a look at the Shanghai index from overnight, you see, bam, goes shooting down and all of a sudden going shooting back up. Same thing in the States, same way just about everywhere. The plunge protection teams, the national teams of China, are all in place. the central banks, to try to keep this thing under control.
Will the European Union survive this Brexit vote?
That's what we're saying. This is the beginning of the end of it.
A lot of countries have nationalist movements. I've heard in Italy, France, Germany, this gives them a chance to vote whether they want to stay.
Right. That's what I just mentioned. That immediately following this vote yesterday, that a number of these populist movements in the states that you mentioned are calling for a similar referendum.
Scotland voted to stay in the European Union, and some people have suggested that means Scotland will split from Great Britain.
Yeah, I'm kind of confused on that. That they voted to stay with the, they voted pro to remain, and they had a vote where they were going to split. So it's kind of confusing to me. Is that correct?
Well, yes, it is. But yes, Scotland just voted a couple of years ago to stay in the UK.
Yeah, but barely.
And now they've voted strongly, very strongly, to stay in the EU.
I know. That's what I'm saying. So it's kind of conflicting, as I say it. Because why would you want to be controlled by anybody?
Well, we've seen confusion on the markets and a lot of volatility because of this vote. Will this volatility continue right up through to the U.S. elections in November?
Oh, yes. Yes, this is the beginning. And again, this is real. I mean, we saw gold move up $90, and now it's up about $57. That's a huge jump. And you're seeing markets again, down 2, 3, 8%. Look what's going on in Japan. I mean, they're deep in bear territory with the Nikkei. They have negative interest rates, several years of Abenomics, and just recession and worse days ahead. Look what's going on in China, despite all of the trillions of yuan in quantitative easing. The country's still, its GDP is at what, they're at 25-year lows. And they keep pumping money and trying to keep it alive. So no, this is going to be very destabilizing. And by the way, this is a positive for a guy like Donald Trump. And and again, you know me, I'm not voting for either Trump or Clinton. My campaign slogan for 2016 is Trump or Clinton, Hitler or Hitlery. So what I'm saying is just we say this as trend forecasters and analysts, not whether we like it or dislike things. So this is very favorable to Trump because his movement in the States is very pro-American, very anti-globalization, and he was opposed to remain, and he was pushing to leave on the Brexit vote. And so, on the other hand, Hillary Clinton and Barack Obama strongly supported the remain. And as the campaign goes on, one of the major issues is going to be globalization and multinational corporations and so-called free trade. And Trump is going to keep hitting Clinton very hard on NAFTA, which, of course, Bill Clinton pushed through, Hillary Clinton supported, as well as her initially supporting the Trans-Pacific Partnership deal that Obama is trying to push through, which he called, quote, a gold standard. So this is going to play very favorable to Trump. And again, there are a lot of wild cards. And again, the biggest wild card could be terrorism. It will get people's mind off the economy in a split second.
We'll have more with Gerald Celente, the publisher of the Trends Journal, next on This Week in Money.
Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of $65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Gerald Celente, publisher of trendsjournal.com. Gerald, will Brexit break up the Trans-Pacific Partnership trade treaty and other similar agreements?
It's going to be, yes, in many ways it will be. Of course, I don't think here in the States it's going to come up for vote in this election year. And it's highly unlikely it'll be pushed through next year. So this could be the death of both the transatlantic and the trans-Pacific agreements.
What's that going to do to the North American economy?
Nothing, because both of these agreements had nothing to do with free trade. It had to do with multinationals having the rights over sovereign nations. So if you say, for example, we don't want you selling your cigarettes here because they cause cancer, well, we're a multinational and you're not going to tell us what to do. You're only a sovereign nation. So what the Trans-Pacific Partnership and the Atlantic deal did was give multinationals more power over sovereign nations. So it won't affect trade at all. It only affect their ability of the multinationals to take more power away from we the little people.
What do you see ahead for stock markets and currencies?
Volatility. It's going to be more and more volatility. And again, there's no recovery. That's the important thing to understand. As we saw with the economic numbers coming out in the States, by the way, durable good orders today were way down. They expected them to be up. That didn't even make the news. And you looked at the employment numbers in the beginning of the month. They came in at 38,000 jobs created. They were expecting 160,000 plus. There's no recovery. It's been a cover-up. Covering up the failing equity system and pumping it up with cheap money so that they could buy back stocks and do merger and acquisition activity. And that's the only thing that was boosted were the financial markets and the 1%. And I'm not making those numbers up. Some between $60 and $70 billion a month in stock buybacks. 2015 was the greatest year on record for merger and acquisition activity because of negative and zero interest rate policies that allows the big guys to borrow money for nothing and to gamble for nothing in borrowing the dough with no interest. So that's part of it. And of course, the other part of the fact is that since 2009 in the United States, 95% of the wealth created has gone to the 1%. Going back, all things are connected. It's a global nomic system. When you go back to the Brexit, a lot of that is discontent about the ruling parties, and whether it's in the UK, whether it's in Austria, Germany, the Netherlands, Spain. Oh, Spain's having an election on Sunday. Will the ruling party be thrown out and Podemos' party move in? This Brexit is going to have a big effect on that. So what we're looking at is a breakup of the post-World War II ruling parties. But it's not happening here in the States. The Bloods and the Crips are still in control, or as their followers prefer to call them, to whitewash their murders and thievery, Democrats and Republicans.
Does Brexit look good for gold and silver as well as gold and silver stocks going forward?
Yes, it does, because it's showing the failure of central bank policies. Central banks are going to have to try to do more to pump up their economies. They're not going to be raising interest rates for a while. So why would you want to hold dollars at negative rates or buy negative bond yields when you could hold gold and put it away and think to yourself, well, if you hold gold for 10 years, we'll buy a bond at negative rates and negative yields rather, and cash it in 10 years and get less back than what you bought the bond for. Would you buy gold or buy a bond?
Is Canada likely to feel any effects from Brexit?
Yes. What this is, again, it's a trigger point. It's not a direct effect. What it did, it triggered and showed the fallibility of an already failing system and an already global economy that's in a global recession. Again, take a trip to Venezuela, shoot over to Brazil. You've been to South Africa lately, maybe you'll have a good time in Nigeria. Oh, Nigeria, yeah, that's only the largest country in Africa and the greatest oil exporter that's now, just their currency just crashed some 40% when they took it off a peg this past week. So you go around the world and you're seeing lousy numbers built upon lousy numbers. both developed and underdeveloped nations, or developing nations, I should say. So, no, and the Brexit, again, was merely a trigger to show how weak it really is.
Will the uncertainty surrounding Brexit cause real estate bubbles around the world to burst?
It's going to be part of it, yes. The real estate market's already you know how there's a saying, the fish rots from the head down. So take America, for example, in its war mentality. Wonder why we're a violent society, is you're killing millions of people all over the world in the name of freedom and democracy. The fish rots from the head down. Take a look at the luxury markets. Take a look at retail. Go to the big names. They're in terrible shape, whether it's retail or diamonds and gold jewelry. Way off. Now go to the luxury real estate markets. They've peaked. They're down some 20% in major cities. It's rotting from the head down. So yes, this can really hit a wave, a shock wave on the real estate markets. It can be a slow decline or a rapid one, but it depends on what the equity markets do. And as we see it, the equity markets plunge with plunge protection teams and national teams in place. It's more than likely that there will not be a 20% one-day sell-off. It may be more volatility over an extended several months. But you never know.
In the U.S., how do the electoral colleges work, and do they favor Clinton or Trump?
Right now, they're favoring Clinton to an extent, but they're going to favor Trump as according to our data, because Trump is going to win primarily Democratic states that are suffering from loss in manufacturing jobs and low wages. So, for example, he'll win in places like Pennsylvania and Ohio and Illinois and Michigan that traditionally go Democratic because of the Rust Belt issue. And again, going back to Brexit and rebuilding America rather than sending our manufacturing as we already have overseas. So on the electoral basis, we believe Trump is the winner. Again, there are wild cards, just like there was a wild card from the terrible assassination of Joe Cox, the MP in the UK. So you can never predict these things. Nobody could predict the future. You could forecast the trends, but you can't predict it. So in the absence of wild cards, we're calling it a Trump White House.
Who would be a better president for the stock market and the U.S. dollar?
Probably for the stock market, Hillary Clinton, because, the facts show that her and her husband have gained well over $100 million from bribes and payoffs that they call speaking fees from the Goldman Sachs gang and other Wall Street entities as a payoff for deregulation of the Glass-Steagall Act and other financial acts under the Clinton administration. Why would anybody pay Clinton's $300,000 an hour to BS when you could hear him BS for free all day long? So it's going to be much more favorable for Wall Street to have somebody there that's already done the dirty deeds for Wall Street, and it'll keep them going. And that looks like Clinton.
Politically, the U.S. really seems to be deeply divided. Is civil unrest more likely with a Trump or Clinton administration? It's
probably more likely with either of them, but they would use a Trump one as the rallying cry for it, because as the economy declines and the gap between the rich and the poor keeps growing wider and wider, social dissent builds. And another important aspect, never before in my lifetime, and I've been at this a lot of years, and I'm going to be 70 years old this year. And I was a kid, and I went to see Dwight D. Eisenhower. When we moved to Yonkers, I saw him campaign in Larkin Plaza. I was a little kid, and I saw him. Never in my lifetime have there been fist fights, violence between two candidates parties. And we're seeing that with the Trump versus Clinton and Clinton versus Trump parties. So this is something new. So violence is escalating in America. Again, it's become the American way. You have a president that kills people with drone strikes that have been convicted of nothing but assumed and suspected of something, collateral damage, and never an "I'm sorry," rather in a quote, "I'm really good at killing people." And of course, wars started by George Bush and the Clintons based on lies, whether it was Kosovo and Serbia, whether it was Saddam Hussein or the Afghan wars, supported by both parties. So its violence is becoming an endemic, epidemic in America, and it's now seeped into the political fabric as well, as party faithfuls fight each other for the fraud that they believe in.
There's a new book on the Clintons by a former Secret Service agent called Crisis of Character. Could the release of this book affect Hillary's aspirations?
Well, yes and no, because she already had such high negative ratings. Matter of fact, both Clinton and Trump, 64% of the people on both sides, and it's just before that book came out, looked at both of them as being not honorable. And her dislike rates almost are as close as Trump's. So we've never had a presidential election like this either, where both candidates have so unfavorably high ratings. So this is unprecedented in America. You could see it's the breakup of a system when you have this kind of thing in front of you. Again, what we're doing different in here than the other countries that we ran through, whether it's Germany, Austria, Italy, France, Netherlands, there's no third-party movements here of any strength.
Gerald, how can people find out more about the Trends Journal?
Go to trendsjournal.com, and to find out even more, go to trendsresearch.com, and you can see all the work that we do, the products that we put out. And again, we make them available to everybody if they can't afford the full subscription price. There's a discount request page because we really want to help people prepare for what's ahead and give them an opportunity to read and see history before it happens.
Gerald, thank you so much for being on This Week in Money.
Hey, thank you, Jim.
My guest has been Gerald Celente, publisher of TrendsJournal.com. Coming up next, Martyn Element on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Martyn Element. He's a Vancouver marketing and corporate advisor who focuses on sourcing and pursuing new business ventures and opportunities. Welcome back to This Week in Money, Martyn.
Welcome to you on this very, very, very historic day. I think probably listening, obviously, to my BBC, and statements were being made there, probably the most biggest vote of its kind in my lifetime that I've seen. And some of the people younger than myself were saying probably the biggest vote of its kind that they will see in their lifetime. So big result here over in United Kingdom, Great Britain.
Martyn, originally you're from Liverpool. You live now on the North Shore of Vancouver. What kind of perspective does it give you looking at what happened in Britain? And if you were there, how would have you voted?
I would have voted to leave. I was, probably no big surprise there, but I also, Liverpool, of course, voted to stay. And then there's a sort of a residential area across from Liverpool called the Wirral, which has some very, very expensive property and people living in, not where I came from Wallasey, but in the suburbs outside Wallasey. And they voted to stay too. So the influence of Liverpool was felt over there. So the big thing that I think that to be thought about with this whole situation is one of surprise. I was no different than Lafarge, the head of the Independent Party over there, and I think as the polls were closing, he was already giving his speech about, well, you know, it appears that we lost our cause and we weren't able to get the leave vote. This is before or just as the polls were closing. And I think, you know, the other thing, there's so many situations here to be spoken about, like the pollsters. I mean, I remember it seems only just yesterday that Cameron was also not looking very happy as the polls were closing over in England, and the papers and everybody was talking about after he's gone and Labour was going to win the whole thing. And of course, it was a landslide victory for Cameron and the Conservative Party. And it was all different mitigating circumstances of different people voting for different reasons. But the upshot was that the pollsters got it wrong. I think the pollsters, to a huge degree, got it wrong again, although I was hearing on the Internet that it's always been a neck and neck. And up until a short time before, it was the Leave vote was winning. So, you know, it's this pollstering thing that they just don't know what's going to happen. But coming back to me again, I am more of an entrepreneur. I have watched in my lifetime the governments interfering in people's lives to a huge extent. And what you've seen go on over in United Kingdom is this tremendous big operation head of the European Union in Belgium, which is staffed, by the way, listeners, by many people making many of them making substantially more money than the Prime Minister of Great Britain. Many of them, unelected, remember, and paying no tax either. And, you know, I think a lot of people got very tired of that and seeing that as a huge target. So why did they vote to leave? Why? You know, this is the big question. I mean, the BBC has put up their 5 reasons why they think that, and I'm not going to start reading those out verbatim because a lot of people have already read them that are interested in this subject. But you've really got to try and think deeper than that. And it goes back to what happened. I started doing these shows about a year and a half ago, and I think about 2 or 3 months into the show, the migration of people, sadly, was beginning to happen in earnest out of places like Syria. And I stressed at that time, the point, please, listeners, I am not making little of these poor, innocent people's plights in most cases, taking their lives in their hands in these little plastic boats that were made for holding, you know, children or maybe at most 2 or 3 people, and they've got like stupid amounts of people in these boats across these short, and they were losing their lives. It was just beginning. And I said, but you know, that's awful. And the human aspect is just awful and gut-wrenching. But I said it's going to become a financial problem, a big financial problem. And boy, you know, I hate to be right sometimes. And boy, has that ever come home to roost. And we've seen it now in millions and millions of people moving around from these poorer areas of the world, and the problems that it's bringing and stressing. And you've got, you know, hundreds of thousands of people hanging around Calais trying to get over to the United Kingdom because the benefits are better there. And I think one of the biggest single headings, and I'm not a racist, listeners, I am not. And I quite honestly, personally think that then the getting out of the EU isn't going to really change things that much over in the United Kingdom, but with the immigration aspect, because so many immigrants are already there. So I don't really think that there's a big solution there. But the average person does. And I think immigration, unfortunately, was one of the big situations here. And people are tired of big government telling them how it's going to be, as another biggie. And, of course, we're having a huge example of that over in the United States. And people are fed up of telling how it should be. And also the fear-mongering that went on from a financial aspect with the average citizen in Great Britain. And you know what they've said to that? They voted and says, you know what, you can scare us all you want, and yes, it might cost me a bit more, but my freedom is worth more. So they're willing to take the medicine or the money or the potential problems with money because, you know, they want to be free and free of these shackles. And so many of them of the older generation, they remember before all this took place. And they remember that we're all better off Well, I was watching a few minutes from Greenspan. I happened to catch it on something else I was watching before the show with Jim Mellon, who, I will talk about him in a minute. But Greenspan was saying, the average person across the Western world is making less and less and less money. All of them. Everybody. America, Canada, Great Britain. They're all making less money. So there's a huge problem there that the average person is not making the money. And the countries themselves are going in deeper and deeper and deeper in debt. And, that's where gold starts to play a very big role. And we can get into that later as well. I won't forget all these things. But, Jim Mellon was interviewed the day before on the banks of the Thames by one of the mediums over here in North America. And he's called the Warren Buffett of Great Britain. I don't think he's quite as financially, but that's his title that he has, and he's considered a very, very important player in the financing space. He was a Leave person, but he said, I am a Leave. He said, but the way things are going, I think it's going to be voted in that we're going to stay. And he said, but my own personal opinion is that the Britain is better off in the lifeboat than it is on the Titanic. And what he means by that, of course, is that he's talking as the Titanic as being the European Union. And, and now that they've all boarded the lifeboat, we'll see what happens. But I think that, the other thing is, of course, that the debt just keeps going up and up and up and up. And I talked to another well-known figure, Michael Ballinger, has an unusual nickname, but we won't be going there, Michael. But Michael has almost 70 or 70,000 plus people on his Twitter. And Michael is a great gold bug and is well quoted all over the world. And I came across Michael after not being in touch with him for almost 10 years by a Bell Potter in Australia that has a fabulous daily letter that they put out. And yes, listeners, if you call them, I'm sure for the sake of giving them your name, they put you on the distribution. But and they were quoting one of Michael's letters. But I talked to Michael this morning, and I said, Michael, what do you think? Martyn, he said, it's all about the liabilities, and it's all about the funding of all these situations all over the world. And that's why gold just keeps reacting in such a violent way. And somewhere along the line, the piper has to be paid. And right now, the debt just keeps going up, and not just in America, but all over the world. And that's why, I've never been the fear-mongering type on the gold stories, but that's why gold is up over $60. And that's why a Nico Eagle was $27 in February. $67 today, listeners. Franco Nevada was $60 in February. Today, $93. American Barrack, $8. Now $26.50. Soros, one guy said to me last night, he just sent an email. I've got one word for this whole situation. George Soros. That was his comment about BritX. He took a huge position, listeners, a huge position in American Barrack. So, we're in a lot of trouble, listeners. The world is in turmoil. This is a very, very, very grave time. Make no mistake of that. But Britain wants to take its chances on its own, as it has done historically through the years. But if you go back through the centuries, you'll see that the gold has played a role in the 1700s, in the 1800s, as Michael was remarking this morning. Then you've got Scotland. There's an interesting animal with this whole situation. They had a very close referendum vote, and they lost. However, the vote for them to stay in was huge. Why is that, listeners? Well, it is because they want to break away from the United Kingdom. Yes, they want to break with Great Britain. They want to be independent, and this was their chance to vote. And they voted to very much so, one of the largest margins of all of them, to stay in the European Union. Well, Scotland was feeling very strong not that long ago with $100 a barrel oil. Now it's 50, so they've lost that. Scotland is only 4 million people, remember, listeners. 4 million. And they have to have money to exist. They cannot exist without Britain helping them or the EU. So they're taking their chances at the moment with the EU and expect another referendum vote there. That you're going to hear that next. And By the way, I'll tell you from a personal experience of doing business over the years in Edinburgh and Scotland, and going to Charlotte Square. And in Charlotte Square, listeners, you'll see all the banks in the Royal Bank of Scotland and a lot of the Scottish banks and the English banks or the British London-based banks, Barclays and what was Westminster Bank and some of the other big banks that are still in the British realm. But there, right there in the square, you'll see many, almost all of the top 5, I would think, French banks. Well, why is that, listeners? Why have you got these big French banks being represented in such a small postage stamp area, really, when you look at it from a size perspective? Well, that's because over the centuries, the French have sided in a big way in the battles that they've had with England, because they equally, at the time, disliked the English. So the French would come and fight alongside. I know that all the historians are, well, we all know that, Martin. Well, a lot of people don't realize that. So the relationships go back centuries and centuries between the Scottish people and the French people. So they don't have they're very aware, even generations later, of comfort there. So, it doesn't surprise me that Scotland, and then other people will tell you that the lady that's heading up the government there, she's a glory hunter and she's doing this. No, she's fighting for her people and representing her people. But, Scotland is going to be the next referendum, and now you've got the dominoes. Holland is talking about wanting a referendum. France. This could be the breaking up of the European Union. And that's what it could be. Absolutely, listeners. And it's going to be an interesting time, Jim.
Martyn, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Martyn Element. He's from Vancouver, and he's a marketing and corporate advisor who focuses on sourcing and pursuing new business ventures and opportunities. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, and Martyn Element. And thank you for listening. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen.